Hello friends, let us discuss something about royalty accounts. Some persons may possess special rights or exclusive rights on physical assets or intellectual properties. For example, a landlord may possess special rights over quarry or mine in his land. A patentee may have special right over his patent rights. An author may have special right or exclusive rights over copyrights of his books. These persons use such rights themselves, or they can give out such special rights over something to other parties. When they give out such special rights to some other parties, there comes into existence a royalty agreement. A royalty agreement is an agreement between two parties. One, the person who gives out special right over something to other party for a consideration on lease, and the other is the person who takes out the special right from its owner on lease for consideration. The person who gives out his special right to the other party is called as lessor, and the person who takes out special right from its owner on lease for a consideration is called as lessee. Royalty agreements intended to benefit both the parties. For lessor, signing a royalty agreement to allow another person to use his rights mean expanding the existing market for his product or entering into new market. For lessee, the royalty agreement can mean gaining access into the products which are too expensive or too difficult to produce on his own. So, if done right, the royalty arrangement may be win-win situation. Let us know the meaning of royalty. Royalty is the periodical consideration which is paid by the lessee to the lessor for taking out the special right over something. The royalty is calculated on the basis of output extracted by the lessee or the sales achieved by the lessee. I am focusing here on three types of royalties: mining royalty, copyright royalty, and patent right royalty. Mining right royalty is a periodical consideration made by the tenant to the landlord, the owner of the quarry or mine. The copyright royalty is the periodical payment made by the publisher to the author, the person who has copyrights of his books. The patent right royalty is the periodical consideration made by the patenter to the patentee, the holder of patent rights. What is the treatment of royalty? As the royalty is a nominal account, we have to make record in the books of both the parties. In the books of lessee, it has to be debited because it is an expense, he pays it. At the end of the year, if the royalty is calculated based on the output, the account has to be closed by transferring it to trading account or production account, as it is a manufacturing expenses to the lessee. If it is calculated based on the sales, then it has to be closed by transferring it to profit and loss account, as it is a selling expense to the lessee. In the books of lessor, royalty has to be credited because it is an income to him. At the end of the year, it has to be closed by transferring it to profit and loss account, as it is an ordinary income to the lessor. In the initial years of lease, because of the preparatory works involved, there may be the chances of no output or low output, so that the royalty payable by the lessee to lessor may be also low. To safeguard the interest of lessor, there is a separate clause in the royalty agreement providing whatever may be the output or sale, a minimum amount has to be paid by the lessee to lessor. The minimum guaranteed amount which is required to pay by the lessee to lessor in any year is called as minimum rent or dead rent. With the objective of safeguarding the interest of lessor, a separate clause is there in the royalty agreement. Minimum rent account has to be prepared only in the years of short workings. The short workings is the difference between minimum rent and actual royalty. Excess of minimum rent over actual royalty is called as short workings. Short workings in any year cannot be always attributed to the lapse on the part of the lessee. In the initial years, as I said earlier, due to preparatory works involved, there may be no output or low output, so that there may be the chance of short workings. And in the subsequent years, due to the stoppage of work because of labor unrest or strike, there may be the short workings. So it is proper that there should be a separate provision in the royalty agreement to safeguard the interest of lessee also. So with the objective of this, there is a provision in the royalty agreement which gives the right to recover the short workings of earlier years out of the surplus royalties of later years. Such right of the lessee to recover the short workings of earlier years out of surplus royalties of the later years is called as right of recoupment or writing off of short workings. As the lessee has the right to recover the short workings of the earlier years out of the surplus royalties of later years, it is considered as an asset in his books. At the end of the year, after passing all the entries relating to short workings like short workings recouped, short workings irrecoverable, etc., the account has to be balanced, and the balance in short workings account should be shown on the asset side of the balance sheet of the lessee. As the lessor allows the lessee to recover the short workings out of the surplus royalties he gained, it is a liability to the lessor. At the end of the year, short workings account has to be balanced after passing all the entries relating to short workings, and the balance has to be shown in the liability side of the balance sheet. This is all about royalty, minimum rent and short workings and their accounting treatments. Thank you.